This is a big one. This is a very substantial market update for June because we got some incredible news from the Bank of Canada this morning that interest rates have finally cut for the first time in 4 years. We've seen an interest rate cut. So it puts our benchmark rate now at 4.75. Basically, the governor, Tiff McClellan, he says that the Bank of Canada has more confidence in inflation moving closer to its 2% target. He says that if inflation continues to ease and our confidence that inflation is headed sustainably to the 2% target continues to increase, it is reasonable to expect further cuts to our policy interest rate. So basically, this is a new chapter for the Bank of Canada. This is a new chapter where the sole focus has been on reducing inflation and working to stunt the economy. And it's working, okay? Unemployment is up to 6.1%. Economic growth came in well below expectations. Now, as much as that sounds negative, that might sound pessimistic, the purpose of these interest rate hikes was to do exactly that. So the intended result is being realized in our economy. It is slowing economic growth. It's slowing the economic system that we have here. Okay, we've avoided a recession by definition, 2 consecutive quarters of negative GDP. We've basically missed it. We've avoided it. No recession. This is great. So that soft landing that was so talked about so often, I'd say 18 months ago, right? Preparing for that soft landing and if it was a possibility, I would argue that yes, it's a possibility. Here we are and the worst is behind us. Now, although Governor McClellan, he says that we're taking our interest rate decisions one meeting at a time. So we have to still pay very close attention to what factors are going to influence the Bank of Canada's rate decisions going forward. But the fact that the ice has been broken, the first cut in 4 years, incredible. This says a lot about the state of the market, the state of the economy, and that this interest rate cut should actually spark a little bit of activity, especially in the real estate market. Okay, so what can we expect now? What happens now? I mean, we've got to pay attention to the next interest rate announcements, which I'll tell you in a second. But in terms of real estate, from a real estate perspective, what we're going to see is a lot of that pent-up desire of sellers wanting to sell but waiting for a reason to, waiting for an economic reason to, a purpose to, that pent-up desire to sell but waiting for prices to come back. We're going to see some inventory. We're going to see some listing inventory, and we're also going to see buyers get back on the horse. We're going to see buyers get out there, activity pick back up. I can confidently anticipate transaction volume will increase. And generally speaking, with seasonality, we pay close attention, right, to spring markets and spring seasonality. Historically, 50% of closings in the GTA happen in July and August, meaning those deals are happening April, May, June. Okay, why? A lot of the reason is being children starting school in September. Okay, 50% of closings, but we're not seeing the volume, the activity to confidently predict that. Those June, August numbers. What I think is that our spring market has been severely delayed and will be delayed well into July and August. June, we're going to see some activity pick back up. July and August will be busy, and September is really going to be off to the races. So for buyers, from a buyer perspective, if you value lower rates, then sure, keep your foot on the gas, hold off, but just know that you're going to be paying more for the asset. Your monthly payment might be lower, will be lower, but your purchase price will be higher. So you're going to be paying that for longer, if that makes sense. On the other hand, you bite the bullet, you do a 1 year, 2 year fixed rate, you can refinance in 1 year or 2 years when the rates have stabilized at lower figures. I can confidently predict we'll be in the 3s by 2026. The overnight rate in the 3s by 2026. I'm going to say like a 3.5 maybe by this time, 2026, spring 2026. For sellers, you want to kind of get moving sooner than later, because what I'm predicting, what I see happening is there's going to be an inundation of listings. We're going to get inundated with more listings now that sellers have the confidence that the buyers are back and they can kind of generate some of those numbers that they arguably couldn't generate before. Okay, there's a reason to sell. There's some excitement here to sell. So we are going to see more listings hitting the market, which means more options for buyers. And when buyers have options, you've got to have a pretty spectacular home. You've got to have a reason why a buyer's going to choose yours over the field, we'll call it. So we need something unique. We need something special. We need to really ultimately compete for the eyes, for the buyer's eyes. Now, big picture-wise, I've mentioned the worst is behind us, so we can be very confident and aggressive in our pursuit of real estate in terms of investing, whether it's pre-construction, resale. There's a lot of numbers and information to navigate to make educated decisions. One of the biggest opportunities that I see personally is in the pre-construction space. There's going to be just extra incentives and extra extended deposit structures to kind of clear out some of that excess inventory, that leftover inventory from these 18, we'll call it 24 months of stagnation. Okay, so I think there's going to be a lot of opportunity in pre-construction right now, and as we see new projects get launched, the absorption will happen a little bit quicker, a little more effectively. So pre-construction, huge opportunity. Buyers in general, to jump in now, before waiting for rates to cut, to jump in now, you're going to get significant discounts on asset prices. I'm predicting a very, very conservative 4% price appreciation this year, very likely next year, and then we'll probably get closer to our 40-year moving average of 7%, maybe in the 5s and 6s into 2026. That's what I predict. So in that regard, this is what we need to be paying attention to. Next rate announcement is going to be on July 24th. This will also be very significant, and this is when the monetary policy report comes out as well. Every other rate announcement, Bank of Canada provides us with their monetary policy report as well. A little more detail in there, a little more to uncover, a little more to understand the reasons behind or the factors influencing the bank's decision. Now, July, we'll have to pay close attention to these inflation numbers. April, we saw 2.7% inflation. Let's see what the next numbers come out at. I mean, again, I've mentioned it before. You've probably heard me say that Canada is very unique in a way, and not in a good way, in a unique and weird way, where we include mortgage interest and we include rental price appreciation in our inflation figures, which is weird. None of the other developed countries really do that. And side note, we're actually one of the first developed countries, or one of the countries in the Western world, we'll call it, that's cutting rates. So this is a big moment. This is a big step. This is a very significant announcement today that's come out. To start the year, most economists were predicting on average 4 rate cuts throughout the year. So if that is the case, we've got July, September, October, and December rate announcements coming up. That gives us 4 more opportunities to cut, which would make it 5 for the year. I think we'll probably see 1 or 2 holds in there. We knew that most of the cuts would come in the latter half of the year, allow some of that stabilization in the earlier half, but in this latter half, I can confidently assess we're going to have minimum 2 more, very likely 3, and again, it's all going to be dependent on how these new inflation numbers come out in terms of what's going forward. So, with all that said, I will be your crystal ball. What do? What happens next? We get excited, okay? The agents are excited. The buyers are excited. The sellers are excited. When you can confidently interpret these numbers and understand the magnitude of what this rate cut means for the market, for buyers, for sellers, we can make more confident decisions. With predictability comes confidence, and with confidence comes knowledgeable, educated decisions where we can make more money on our investments. We can make smarter decisions. We can deploy our capital more effectively in the right projects, whether that be pre-construction, whether that be multifamily, whether that be commercial opportunities, whether that be single-family detached outside the core. Single-family detached, new units, dropped to a 40-year low. All this talk about adding housing and the government build homes faster. It's an impossibility in the downtown core, and it's very difficult on the periphery. So this addition of supply, it's not waving a magic wand and creating housing. It's not manufacturing remote controls or bubble gum or coasters, okay? You don't just turn up the speed on the manufacturing line. That's just not the way housing works. It's very difficult to add supply, and the timeline to add supply is very difficult. So what do I see with this good news? I see more activity, more transaction volume, more buyers coming out of hibernation, more sellers as well coming out of hibernation and listing, but there's still just not going to be enough to maintain what we need with the immigration numbers, with the amount of available jobs right now, and qualified talent to earn pretty decent incomes. We're going to see things get a little nuts. We're going to see things, well, comparatively, I'll say. Okay, we're going to get back to normal, and comparative to very slow, very stagnant, normal's going to seem super sexy. Okay, that being said, stay tuned, pay attention to our content, make sure you're following us on social media so you're getting as much up-to-date information as possible. This is probably the best 10 minutes you've spent today watching this video, breaking it down, what's happening in our market, and this is probably one of the most significant announcements in real estate in the last, I'm going to say over the last 4 years since the last rate cut. Okay, over the last 4 years. This is significant, this is phenomenal news, and this tells me that we're headed in the right direction. We're going forward. The low has come and gone. We're past the low. Now we're going to see that appreciation. So in terms of upsizing, let's go. Your opportunity is shrinking. In terms of investing or getting into the market, you've got a phenomenal opportunity to make that happen right now. The longer you wait, yes, you might pay lower rates, but you can take advantage of the lower prices and lock into a 1 year, 2 year fixed and benefit on both ends. So anyway, hope you guys enjoyed this. I won't keep you any longer. Have a great day, and let's talk real estate. You know where to find us.